You've done it 1,000 times, right? You tap, you swipe, you stick your card in a machine. It feels instant, almost like magic. But what's really going on behind that simple little tap is a massive, hidden world of global strategy. And in this explainer, we're going to pull back the curtain and show you how your card payments actually work.
So seriously, have you ever actually stopped to think about it? In that split second when you buy your morning coffee, what is going on? I'll tell you what's not happening. Your money isn't just zipping from your account to the coffee shop. No, that little tap sets off a massive, lightning-fast chain reaction across an incredibly complex global system.
And just like this blueprint shows, it is definitely not magic. Every single payment you make kicks off this sophisticated dance of data and money between a whole bunch of different players. And you know what? Understanding this ecosystem, this dance, is the key to understanding the entire world of payments.
All right, so to understand this dance, you've got to know the dancers. And it turns out there are 5 main players on the stage for almost every single card transaction you make. Okay, so let's meet the cast. First, the obvious ones. There's you, the cardholder, and the merchant, the business you're paying. Simple enough. But then you've got 2 different banks in the mix. There's the issuing bank, that's your bank, because they issued you the card. Makes sense. Then there's the acquiring bank, that's the merchant's bank, and their job is to acquire the payment for the store. But the real linchpin, the one holding this whole thing together that you've probably never even thought about, that's the card scheme.
So what on earth is a card scheme? Well, you definitely know their names. We're talking about the big ones like Visa and MasterCard. And here's the key thing. They are not banks. Not at all. Think of them more like the builders of the global financial highway system. They set the rules of the road, the technical standards, and provide the network that lets your bank in one country talk instantly and securely to a merchant's bank halfway across the world.
And that's exactly why this visual puts them smack dab in the center of everything. They really are the conductors of this global orchestra. Without them, you just have a bunch of noise, thousands of banks and millions of merchants all unable to communicate. The whole system would just fall apart.
Okay, and this brings us to the real heart of the strategy. See, for any company that wants to play in the payments world, everything, and I mean everything, comes down to a fundamental choice between 2 very different activities, issuing and acquiring. So think of it like this. On one side, you have the issuing game. This is all about the consumer, about you. The goal is to get as many cards as possible into people's wallets. But on the other side, you have the acquiring game. This is all about businesses. It's about signing up merchants and giving them the tech they need to accept all those cards. They are 2 totally different businesses with totally different playbooks.
And the way a company chooses to balance these 2 things, how open or how exclusive they are on the issuing side versus the acquiring side, it literally creates a strategic map. You can think of this as the game board for the entire global payments industry.
And when we fill out that game board, what we see are 4 very distinct territories, 4 core business models. Each one is a completely different strategy with its own set of rules for how to compete, how to make money, and ultimately how to win.
So let's dive in and take a look at these 4 playbooks. We're going to start with the 2 polar opposites on this map, the 2 extreme corners of the board.
First up, we have the open loop model. The name kind of says it all, right? This is the strategy of maximum reach. The goal is to be everywhere. In this system, any bank can issue a card that works at any store's terminal. It's all about universal acceptance. And yeah, your standard Visa or MasterCard, that's the classic open loop strategy in action.
So why would you go with an open model? Well, it's a huge win-win. For the banks issuing cards, their card is now useful everywhere. For the companies helping merchants accept payments, they can serve a gigantic market of cardholders. This creates this incredible snowball effect, what we call network effects. More cards attract more stores, which in turn makes more people want to get the cards, and the whole system just gets bigger and stronger.
Now let's jump to the complete opposite end of the spectrum, the closed-loop model. You might know it better as the walled garden. Here, one company tries to do it all. They are the issuer and the acquirer. It's a totally self-contained ecosystem built for one thing, maximum control. And the prime example of this, you guessed it, American Express.
So why build these high walls? It really all comes down to that one word, control. You control the customer experience, the brand, the security, the features, and, this is the big one, you get to capture all the revenue. You don't have to share fees with anybody. And on top of that, you get exclusive ownership of every single piece of transaction data. In today's world, that data is basically gold.
So you've got the wide open prairie and the high walled garden. But a lot of companies live somewhere in the middle. These are the hybrids. The semi-open loop is all about strategic alliances.
A perfect example is a co-branded airline credit card. The airline partners with a specific bank and a card network. It's a model built on deliberate, exclusive collaboration.
And our final model is the semi-closed loop. Now this one's a little different. It's defined more by who you choose to exclude. It's about curating your ecosystem. For example, a payment processor might accept cards from most of the big networks, but deliberately block a smaller one that they think is too risky or has too much fraud. They're basically building a garden with walls, but with a few very carefully chosen gates.
Whew. Okay, so we've looked at these 4 different, pretty complex strategies. But what does it all boil down to? It turns out there is one single fundamental trade-off that underpins this entire system.
And here it is. This is the whole game right here. It's a constant tug-of-war between two powerful opposing forces, reach versus control. Do you want to be everywhere, accepted by everyone? That's maximizing reach. Or do you want to own the entire process, the brand and the data from start to finish? That's maximizing control. Every single payment company has to decide where they want to live on this spectrum.
And this isn't just some academic exercise. This is the key. Because if you can figure out where a company sits on the spectrum, if they're playing the reach game or the control game, you can understand their entire business strategy. You can see why they do what they do, and you can even start to predict their next moves.
So the next time you tap to pay for something, just remember, that system isn't just a technical pipeline for money. It's a strategic battlefield. And on that battlefield, global players are constantly navigating this epic trade-off between universal reach and absolute control.
Which really leaves us with one final question for you. Go ahead, take a look in your wallet. Look at the cards you carry around every day. Which game is each one of them playing? Is it playing the game of reach, trying to be accepted everywhere on the planet? Or is it playing the game of control, trying to lock you into its own exclusive world? Now you know how to tell?